Hello everyone, this is today's video analysis for January 4th, 2019. Today we're looking at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Now, it's of course important for me to mention the fact that in about 45 minutes from the recording of this video, we'll have U.S. non-farm payrolls information, jobs news, so some of this analysis could change in the next hour or so, depending on the sentiment after that news for the US dollar. So keep that in mind as we go through this. There could be some changes in the next hour or so. If we were to simply go on trend, the trend is and has been down for the New Zealand dollar for the past several weeks. We start all the way top of the black trend line. We're looking all the way up into the 69.70 level, back into about a month ago. December 4, we started this downtrend. So downtrend for an entire month. Of course, we had the anomaly, the crash yesterday where the market pressed all the way down here into the 65.50s and then suddenly reversed and came right back higher again, that leaving that long wick at the bottom. So the question is that an anomaly? Will the market return to the downtrend? Will it start to give us signals of reversal to go back up? All of those are questions I don't think are answered quite yet, but we could see some of those answers come if we start to see breaks of new lows or breaks of new highs. What I mean by that is we see the resistance here at the pink shaded area. We saw the market come underneath 67.10, 67.35, the pink zone, and fall off of that. That'll be easier when I zoom in. You can see historical resistance into that pink zone as well, and support, by the way, at that pink shaded area historically. But that's obviously our resistance along with the black trend line. So a continuation of trend means we're looking for resistance there, and then we also would look for the breakdown of the yellow zone, which has been challenged and tested for the past couple of days, but no break of that. And I don't consider this a break. I consider that a challenge and test because we have not seen a full candle body underneath 66.60, the bottom of the yellow shaded area. We also, of course, have that 100 period simple moving average in there floating around inside that yellow zone, showing that the market so far has been unable to break it. So if we're going to trade the trend, we're looking for good news out of the U.S., very positive news out of the U.S., maybe a sell-off of the New Zealand dollar, the Kiwi, and we look for it to break the yellow zone and go lower and start to resume the downtrend. On the other side of that, if we get poor news out of the U.S. and we get the break of the black trend line and the break of the pink shaded area above 67.35, we could be looking for further reversal. And that could be signaled by this sudden pullback of this crash that we saw yesterday. So we have to still watch for clues and evidence. So if we're a buyer, if we're going to assume reversal to go back up for the New Zealand dollar, poor news for the U.S., good news for New Zealand, a break of resistance, we're going to look for it to break the pink shaded area, the black trend line, and go back up. That becomes a buying opportunity above the pink zone. Also, we could be looking at support at the yellow zone. So those two zones are really going to be the tell of whether or not we're reversing the trend to go back up above the pink zone or continuing the downtrend below the yellow zone. So we want to watch for that carefully in the next hour or so, or even going in the next week. Let's go ahead and zoom in a little bit here. And I mentioned the fact that we had gotten under the pink zone. I just want to mention that again. We were under the pink zone, found resistance 67.10, and then began that fall. Even prior to the long crash candle here, we had that fall from the pink to the yellow shaded area. So that confirms that pink zone as resistance. Of course, as mentioned, the yellow zone is support. So we need to be watchful. Break of the pink zone resumes an uptrend. Break of the yellow zone resumes a downtrend. Part of that scenario will, again, potentially have to do with the US dollar. Just a quick peek at the US dollar index. It hasn't been very friendly for us as far as trends go in the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Just look at this black box. The market has been unfriendly for trend trading. Just zooming in here, we saw every day, basically, we're seeing a new trend. If the market goes bullish again from the blue zone, as it has for the past 10 days or so, we would look for it to go back up to the orange zone. We don't know if that's going to happen, though. If the market goes bearish US dollar, breaks the blue zone, 95, 50, 70 area, we would look for a bearish trend for the US dollar, and of course the New Zealand dollar, if this goes down, would go up. And of course, if it continues what it's been doing and starts to go bullish again above the pink zone back to the orange zone, we could look for the New Zealand dollar to go back down again. So we don't really see a friendly trend for the US dollar index. We'll keep an eye on that for the day today with news, and that will assist us in deciding which direction we can trade the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.